Welcome to Wisdom of Wealth. Today we explore the story of one of the most legendary figures in Wall Street history, Jesse Livermore. He entered the stock market at just 14 years old with only $5. 38 years later, he had built a fortune of $100 million, which was about 1/42nd of the entire annual tax revenue of the United States at that time. Even President Woodrow Wilson invited him for a personal meeting. He was known as the Great Bear of Wall Street. His influence was so great that J.P. Morgan once pleaded with him to stop shorting the market. In 1919-9, the New York Times named him the greatest stock trader of the century, even ahead of Warren Buffett. Despite his unmatched trading skills, Jesse Livermore died in despair, saying, "My life has been a failure." Yet his trading techniques, his approach to money management, and his understanding of market psychology are still used by professionals today. Through his words, we can uncover timeless truths about markets and human behavior. And we can also learn from his downfall to grow wiser on our own journey. Now let us listen to the wisdom of Jesse Livermore.
Great speculators always wait. They are patient. They wait for the market to confirm their judgment. Remember this. The key to making serious money is not constant buying and selling. It lies in the ability to wait for the right moment. Speculation is the most fascinating game in the world, but it is not a game for the careless. It is not for those who avoid thinking. It is not for people who are emotionally unstable. And it is not for those who are obsessed with the dream of instant wealth. For these people, speculation often ends in complete loss. Never blindly trust tips or rumors. Do your own research. Focus on facts. Understand the fundamentals of the market. The greatest enemy of the trader is not the market itself. It is human nature. There are no permanent buyers or sellers in the market. There are only those who are correct in their decisions. I often say that the easiest way to trade is to follow the direction of the market. Buy when the market is rising. Sell when it is falling. It is not about calling the very top or bottom. It is about entering at the right time. In a falling market, I keep selling. In a rising market, I keep buying. Most people do not want to hear about market trends. They only want to know what stock to buy or sell today. They want profit without effort. They do not want to think. They trade often and usually lose. Imagine a shop owner starting a new business. He does not expect to earn a 25% return in the first year. Yet new traders often feel that 25% is not enough. They want to double their money. This thinking is unrealistic. They do not treat trading as a serious business. You can form your opinion about the market in your mind, but never act until the market confirms your view. Only when that confirmation comes should you risk your capital. You cannot succeed in speculation by trading every day or every week. In a whole year, there may only be a few real opportunities. Until then, the smartest thing to do is wait. While you are waiting patiently, others are trading constantly. Their mistakes create the very opportunities that will later reward your discipline. Many traders have felt this moment. The market looks promising, but deep down something feels wrong. That sense only comes from long experience and study. I always wait for the market to reach an important level before I act. Once it does, I trade with confidence. This habit has helped me earn consistent profits. I usually begin trading at the start of a trend when my rules tell me it is time. So I stay calm. I let the market develop. Eventually, it sends a clear signal to act. Years of trading have taught me this. If I enter too late in a trend, I will miss most of the profit. You should focus on the strongest stocks in the market each day. These are the leaders. Especially pay attention to leaders in strong sectors. If you cannot make money from these, you will not make money elsewhere. At times, I have tried to place small price movements, but this has cost me my position and my chance to earn serious gains. In long-term trading, patience is more important than any other quality. But knowledge and patience work together. Before you enter a trade, study carefully. Make sure this is truly the best moment. That is how you protect your profit. When a trader can spot a price turning point and explain its behavior, he already has an advantage. If a stock moves from $10 to $50, do not sell too quickly. Ask yourself whether it might reach $150. When I made a large profit, I would set aside half as savings. This habit helped me many times. I only regret not always following it. Never add to a losing trade. Remember this rule clearly. Profits take care of themselves. Losses do not. I follow my trading principles with discipline. I do not trade based on feelings. I follow what the market tells me. Focus your efforts on strong stocks in an upward trend. This gives you clarity and control. Before you enter a trade, make sure it aligns with your analysis. If the trade goes against you, exit quickly. Never lose more than 10%. If a price breaks an important level and behaves in an unexpected way, this is a warning. If the opportunity is good and the risk is acceptable, take action without hesitation. My biggest profits did not come from guesswork. They came from calm observation and proper planning. There is no magic formula in trading. A trader must think like a professional pool player. Do not only focus on the current shot. Always think ahead to your next move. After I got married, I created a trust fund for my wife. Later, I did the same for my son. This was not just because I feared the market. It was because I understood that people tend to spend whatever money is within reach. I wanted my family to be safe, no matter what happened in my trading life. People who seek instant wealth have no patience. If they win, they rush to take profit. They convince themselves that they are smart. They believe trading is a simple game of chance. But they are wrong. Someone who spends years mastering a craft sees it differently. This separates the professionals from the beginners. This difference decides who makes money and who does not. If your stock is not moving the way it should, you must stop trading it. Do not argue with the market. Do not chase lust profits. Stop while you still can limit your loss. You must always remain alert. If you relax your focus, you might miss a major opportunity. Ask yourself whether your trade is following the path of least resistance. Has it broken through a key level? Is the trend clear? If so, this is your signal to enter. Never try to sell at the very top. That is a mistake made by fools. If there is no room left to rise, sell on the first sign of reversal. I make money by trusting my judgment of the market, not by selling my opinion to others. If prices are stuck in a tight range, there is no reason to predict the next move. Continue watching and wait. Only act when the price breaks clearly out of the range. It took me a long time to learn this simple truth. Never place bets on small short-term moves. Keep your focus on the larger market trend. If someone wants to make a living from trading, they must have confidence and believe in their own judgment. Choosing the right time to enter a trade is the first step toward success. Professional traders care about being correct in their analysis, not just about making money. If a stock is acting strangely, avoid it. If you cannot explain what is wrong, you cannot predict what will happen next. Without a clear understanding, there can be no forecast. And without a forecast, there can be no profit. Clear thinking is essential. Finance is about pursuing results. If you stop thinking for yourself and blindly follow the crowd, you will end up with the same outcome as everyone else. No one can predict every move in the market. You just need to be right when it truly matters. It's not about being fast. It is about being smart and finishing strong. That's all. Thank you.